It is important to have a savings plan if you are looking to build wealth. The key here is to start early and make saving automatic by putting money into a retirement account like an IRA or 401 at work. You can also include your emergency fund as part of your savings plan. Similar to building a regular savings habit, investing in the stock market on a regular basis is another way to build wealth over time. There are many ways to invest, but starting with a simple mix of stocks and bonds is recommended for most investors. As you build up your financial assets, it's important to remember that your expenses must also be under control so that you have more money left over after paying for necessities each month than the previous month. Making smart decisions about what you spend and where you spend it can help you save more money and invest more wisely each month. Saving regularly is an effective way to build wealth as it allows you to take advantage of compound interest and time. The sooner you start, the more time your money will have to grow for you. Investing in a diversified mix of assets can help reduce risk and offer opportunities for greater gains over time. There are many ways to build a diverse portfolio, but it's important that you choose the one that works best with your investing goals and financial situation. Staying disciplined with expenses is crucial if you want to build wealth, especially if your income is not always consistent. If your income fluctuates or is subject to change over time, it's important to avoid lifestyle creep so you can continue saving no matter what happens in your life. It's important to start saving early and regularly in order to build a sustainable stream of income. This will give you time to let your investments compound over time, and you'll also have a wider range of options when it comes time to invest. This can be as simple as setting up an automatic transfer each month from your checking account into a savings account. If you can't do that right now, try setting aside just $10 each week. Once you've started saving, the next step is investing. Try building a portfolio of different assets like stocks and bonds. Diversifying your investments helps mitigate risk because if one asset class struggles, others may be doing well at the same time. You should also look for low-cost investment options that provide broad exposure to multiple asset classes such as mutual funds or exchange-traded funds. If you're investing in individual stocks, consider using low-fee index funds instead. Research has shown that this strategy can help investors outperform more than two-thirds of professional investors over the long term. Along with saving regularly and investing wisely, make sure that you're tracking what you spend on a regular basis so that you know where your money goes each month. You should also think about ways to reduce or eliminate extraneous expenses to free up more cash flow every month. The earlier you begin, the more time your investments have to compound and grow. A good rule of thumb is to save 10% of your income every month. The asset allocation you choose for your portfolio will have a significant impact on how much wealth you accumulate over time. The more volatile an asset class is, the greater potential for growth or loss it will have. For example, stocks are generally considered a riskier investment than bonds because they tend to experience larger gains and losses than bonds do. It's important to have a mix of assets in your portfolio that matches your risk tolerance so that you can sleep well at night when markets are experiencing large swings in either direction. When it comes to deciding where to invest, remember that dollar cost averaging spreads out your purchases over time instead of buying everything at once. This means you buy more shares when prices are low and fewer shares when prices are high relative to the average price over time, resulting in less risk of incurring big losses when there is downward movement in the markets and potentially higher returns when there is upward movement in the markets. Dollar cost averaging can also help mitigate anxiety around making big decisions about how much money you're investing at one time into what could be an expensive stock or ETF purchase that might not work out if things go south quickly with the market or individual security you've decided on. Thank you for watching.